Have you ever wondered what life will actually cost in 50 years from now? And a related question, have you ever wondered if the officially stated inflation rate is anything close to reality? Well, we're gonna answer both of those questions today by taking a look at 7 different commonly used items. First, we're gonna see what those items cost in 1970. Then we're gonna see what those items cost today. And then using that rate of inflation, we're gonna project that forward another 50 years to see if that continues, what will those prices be in the future. And if you stick with me to the end, I promise you some of these are going to absolutely shock you. A quick note about the methodology that I chose to use here. Number one, we have to talk about the time frame. Why 1970? Well, if we look at what has taken place in the United States since 1970, number one, we had a massive currency devaluation. The dollar used to be backed by gold. That was defaulted on, and we had a massive devaluation in the dollar relative to gold, relative to purchasing power, and many people are somewhat convinced that we will have a similar sort of devaluation, even if it's not all at once, over time from money printing over the coming decades. And so by looking at a time frame that includes a prior currency devaluation will allow us to account for that in future prices. The second reason why I think it's important to take a look at a long time frame like 50 years is because it gives us the ability to take into account a lot of technological progress that we have made over that time period. Many technologies and advancements have allowed us to make a lot of things a lot cheaper, and especially with the introduction of the internet, globalization, it allows us to take into account a lot of those things that have had deflationary pressures on prices. Obviously, over the last 50 years, we've also had wars, increased politicalization, a massive explosion in the amount of regulation that we have. And so we have a lot of forces that have increased prices. We have a lot of forces that have pushed down on prices. So taking a look at the last 50 years gives us a pretty good proxy for some of the things that we expect going into the future. We expect a lot more technological advancements. We expect a lot bigger government. We expect a lot more money printing. We expect deglobalization. We expect wars. And it just turns out that if we look back the last 50 years, we get almost all of that. And so we could have a pretty good idea if similar things continue to happen for the coming decades that will have a similar impact on prices. And then the second thing about the methodology is the chosen items. The items that I chose were items that we used in the 70s and we also still use today in pretty much the exact same way. So I couldn't choose something like sewing machines or radios, which at the time, pretty much every household had something like that, because today almost 0 households have those. So I had to choose items that people still use today in virtually the same way, in which the pricing data was readily accessible. Deal? Fair enough? All right, let's take a look. First up on the list, we're gonna take a look at the average price of a home being sold in the United States. During 1970, the median home price was just around $25,000, depending on the month. So we'll just round it to 25,000. By the end of 2023, the median home price was just over 400,000. So in the last 53 years, home prices have gone from 25,000 to over 400,000. If we take a look, that is an annual inflation rate of 5.37%. Every single year. All right, now here's the fun. If that inflation rate continues for the average home price for the next 53 years, like it has for the past 53 years, we come up with a staggering ending value of $6.39 million. That's right. $6,398,231 for the median US home price. 2076 is gonna be an expensive year. All right, let's move on. Item number 2 is a dozen eggs. This one's gonna surprise you. In the year 1970, a dozen eggs cost 60 cents. However, in the year 2023, by the end of the year, a dozen eggs cost $3.49. Obviously, if we were doing this in 22, the egg prices would look a lot different. And of course, today it depends on whether you get pasture raised, cage free, the regular cheapo eggs. So $3.49 is pretty much right in the middle. If we start off with 60 cents 53 years ago and end today at $3.49, over 53 years, that is an average inflation rate of 3.37%. If we plot that forward for the next 53 years, and eggs continue to have an inflation rate of 3.37% for the next 53 years, then eggs will cost a whopping $20.21 by the year 2076, just for the middle tier regular eggs. All right, on to item number 3 is a gallon of milk. Back in 1970, 1 gallon of milk would run you $1.32 per gallon. Today, 1 gallon of milk will run you $3.29. Comparing that to eggs, we can see that this is already going to be a much better inflation rate. They've really done a number on those cows, getting them to spit out a lot more milk than they used to, I guess. Starting off in 1970 at $1.32 per gallon and ending today at $3.29 per gallon. Over the course of 53 years, that is an inflation rate of only 1.74%. And if we plot that forward another 53 years, assuming similar advancements and similar inflation rate for a gallon of milk, then by the year 2076 in 53 years, 1 gallon of milk will cost $8.21. That's actually not too bad. But let's take a look at item number 4, which is a car. Back in 1970, a Dodge Demon would run you $2,600, a Ford Galaxy would run you $3,100, and a Ford Pinto would run you $1,900. The average of those three is going to be $2,582, so that's what we're going to go with as the average price of a new car in 1970. Fast forward to 2023, and we can see that the average transaction price of a new car was $47,936. Going from $2,500 to $47,000 over the course of 53 years leaves you with an inflation rate of 5.67%. And if we continue that inflation rate of 5.67% into the future for 53 years, the average price of a new car in 2076 will be a whopping $891,460. No, that's not a joke. $890,000 for the average price of a new car if that inflation rate continues. Now suddenly you're starting to see why the difference between 3, 4, 5% inflation rate is such a big deal over a lifetime. Massive devaluation in your purchasing power. But we're not done yet. That's just a car. Let's see what this does to a gallon of gas. In the year 1970, 1 gallon of gas cost 36 cents for a gallon. Fast forward to the end of 2023, and the average price for a gallon of gas across the United States is $3.35. This is another one of those things. If we were doing this a year ago, these numbers would have looked a lot different. Let's run the numbers for a gallon of gas. Going from 36 cents to $3.35 over the course of 53 years runs you an average inflation rate of 4.3%. If we carry that inflation rate forward on gas for the next 53 years, then in the year 2076, 1 gallon of gas will cost $31.19 for 1 gallon. The next item on our list is a fun one because this is a very popular long-term historical measure of stable purchasing power across most goods. And that, of course, will be 1 ounce of gold. Obviously, the United States was still on the gold standard in 1970, so 1 ounce of gold was $35 per ounce. Run that forward to today. 53 years later, gold is trading at $2,030 per ounce. Over the course of 53 years, that is a whopping inflation rate of 7.96%, the highest one we've seen on our list so far. For anybody who owns gold and would like that to continue into future, that should be a pretty exciting number there. So let's see where we come out in 2076. With a starting price of $2,030 per ounce and increasing in price by 7.96% every year for 53 years. That puts the future price of gold in 2076 at $117,605 per ounce. That's right, over $100,000 per ounce of gold. And one thing that you should notice here is that that rate of increase is larger than all of the other things we've looked at on our list, which means that gold has actually increased in its purchasing power compared to all those other items. If you would have stored your savings in gold during that amount of time, you'd actually today, you'd be able to buy more of those things than you would if you had stored your money in those things. But you still may not be convinced about about gold, so let's take a look at the most common investment vehicle today, the S&P 500. During the year of 1970, the S&P 500 started off at a value of around 96, then plummeted and hit a low value of around 69, and then came right back up and exited 1970 around 90, which means we can plot about halfway in between for somebody who may have been dollar cost averaging during that year at 85 for the index value of the S&P 500 for 1970. Fast forwarding from 1970 when the S&P 500 was at 85 all the way to today when the S&P 500 is 4,585, we come up with an average inflation rate of 7.81%. Just in case you don't remember what gold was 7.96%. That's within a rounding error, margin of error based on where you start the calculation, where you end the calculation. That's virtually identical performance for the last 53 years between the S&P 500, which is supposed to be one of the best, most popular, best, safest, most liquid, smartest investments in the world, and gold. Almost identical performance, or if you want to call it the inflation rate. If we fast forward 53 years from now, starting with an index value of 4,585, an average inflation rate or performance of 7.81% per year, the next 53 years, we end with the S&P 500 index at a level of 246,756. Now, just in case that number is meaningless to you, then we can take a look at the price per share of the most common ETF that invests in the S&P 500. That would be SPY. It's currently at $458 per share, which would mean by 2076, the price per share would be $24,648. So today you can buy one share of SPY for $458, and in 53 years, that should be worth $24,648, as long as the rate of increase over the last 53 years carries forward to the next. And last on our list is the hated college degree. In 1970, the total cost of attendance, which included fees, tuition, and room and board, was $1,238. In 2023, that number on average is $26,027. So if we start off at $1,238 back in 1970 and today at $26,000 over the course of the last 53 years, that is an inflation rate of 5.91%. If we plot that forward, given the starting point today of $26,000, and we grow at the steady rate of 5.91% for the next 53 years, then in 2076, college tuition, room and board together will cost $545,296 per year. So let's get our leaderboard up here and let's recap. Coming in at last place with the lowest inflation rate, we have milk, which has averaged 1.74% inflation over the last 53 years. And if that continues, then by the year 2076, a gallon of milk will cost only $8.21. Coming in seventh place, we have 1 dozen eggs, which back in 1970 cost 60 cents, today costs $3.49 at an average inflation rate of 3.37%. If that continues into the future, then by the year 2076, a dozen eggs will cost $20.21. Next, we have a gallon of gas, which in 1970 cost 36 cents, today costs $3.35 with an average inflation rate of 4.3%. If that continues, then in 53 years from now, 1 gallon of gas will cost $31.19. Next on our list is actually the average price of a home, which in 1970 was $25,000, today is $400,000 with an average inflation rate of 5.37%. Fast forward 53 years into the future, and the average price of a home will be $6,398,231. Better start saving up for that down payment now. Next on the list, we have the average price for a new car, which in 1970 was $2,582. Today, it is $47,936. That is an average inflation rate of 5.67% per year. And if that continues for the next 53 years, then by the year 2076, we are going to see a new car on average cost $891,460. Next on our list is a college degree, which in 1970 was $1,238 per year. Today, it is on average $26,000 per year. That's an average rate of increase of 5.91% per year. If that continues, then 53 years from now, 1 year of college will cost $545,296. You better start saving up for your college, for your kids for college right now as well. And then coming in at a very close runner-up, we have the S&P 500, which had an index value of 85 back in 1970, and today it is at 4,585. Or in other words, the price of one share of SPY at $458 per share. That's an average increase per year of 7.81%, which if continued into the future for the next 53 years, would mean that one share of SPY will cost $24,648 in the year 2076. And coming in number one, our top rate of inflation or rate of increase or compounded annual growth rate, whatever you want to call it, is going to be gold. 1 ounce of gold in 1970 cost $35. Today, it is $2,030 per ounce. That gives us an average annual increase of 7.96% per year. And if that continues on average into the future, for the next 53 years, then by 2076, 1 ounce of gold will cost $117,605. As you can see, there is no such thing as the inflation rate. We have money printing, which all else being equal will cause prices to go up. We also have technological progress, which all else being equal will push prices down. We also have increased regulation, which pushes prices up. We also had globalization, which pushes prices down. There are tons of factors at work here, and some things react more to one thing versus another. And so everything, every person, every household over time is going to experience a different inflation rate. The most important thing to notice here is there are ways to protect yourself, protect your purchasing power, regardless of what happens in the future. I hope this was as fun for you as it was for me. And if you would like help with protecting your portfolio against inflation or anything else, that's exactly what I teach members of Heresy Financial University how to do. And right now through the end of the year, you can get Heresy Financial University membership at a 67% discount compared to what it will be starting just next month. It will never be this price again. Use code LASTCHANCE2023 and the link is in the description below. As always, thanks so much for watching. Have a great day.